One thing you need to pay attention to as a beginner trader is your strategy, because without one, you won't be able to see success in the market. In fact, it took me a long time to realize I need a simple strategy to stay profitable on the market. In this video, we're going to look at a simple strategy which you can use to trade the market. This is the same strategy I use for crypto, gold trades, and even Forex as well. So of course, if you are looking for one of the simplest strategies to trade the market, I guess this is the one for you. So the first thing we're going to look at is direction. Then we check our key levels. We will also be looking for liquidity. The fourth one is imbalances. Then we'll look for some order blocks. Then lastly, we'll be looking at entry and confirmation. So these 6 different stages is what I go through every day to find my own trading setups. The first one, which is direction, mainly revolves around market structure, because without market structure, you will not be able to tell where the market is heading. So what I do when I start analyzing the market is I look at the market structure and I try to understand where the market is heading, whether it's in an uptrend or a downtrend, or maybe it's just consolidating. Now, there are 3 different ways the market moves. Okay, the first one is an uptrend. So you see that the price of that particular asset moves from one leg, goes up like this, and then you see this movement. Okay, this is an uptrend. When you see something like this, we are in an uptrend. Now, when the market decides to go with the other option, you see something like this, which is telling you that we are in a downtrend. All right, so when you see something like this, it means that the market is heading down and we are in what we call a downtrend. Okay, so when the market is going up, we're in an uptrend. When it's going down, we're in a downtrend. Now, there is another one, which is the third one, which a lot of people don't like to trade that particular direction, is the consolidation type. Okay, so when the market is moving this way, it's more or less consolidating at one particular range. So the other name for it is also a ranging market. All right, now when the market is ranging or consolidating like this, you realize that it moves from, let's say, this level, which is on the same line here, like this, and then it goes all the way up, it comes back down, it goes all the way up again, it comes back down, it goes all the way up, and it stays in that particular range, and that's why it's called a ranging market. Okay, when it's going in an uptrend, you realize that the market goes from one leg all the way to the upside. It has a pullback, or it does a pullback, then it goes up again, you see a pullback, and it goes up again. It means it's climbing on an uptrend, or is going up, more or less like you are climbing a stairs. All right, now the other one, which is the opposite of an uptrend, is a downtrend, which also clearly looks like you are descending a stairs. Okay, so it goes from this leg all the way down, goes up again, it comes back. So this is more like a pullback, then you get this big move, then you have a pullback, big move, pullback, big move. All right, so if you come on the chart that you're coming to analyze for a setup, or you're looking for a trade, you have to make sure that the market is doing one of these 3 types. Now, what you don't want to do is to trade in the middle of this consolidation, because maybe your analysis may tell you that it's going up, and then because the market is in a consolidation, when it gets here, it's going to reverse on you, and then it's going to take you out. This has happened to me so many times. I've lost money so many times because of this. In the beginning, I wasn't really sure how to identify whether a market is in consolidation or is maybe, rerouting to go towards an uptrend. So I'll do my analysis and I'll take my trade. Maybe it's a buy trade, hoping that the market will go up. And then when it gets to this level, instead of it to continue climbing up, it will reverse on me and rather take me out. So you have to always make sure that your analysis is clear, and then you also know that the direction of the market is in a clear uptrend or downtrend, not in a ranging phase. Because if the market is ranging and you are not sure of that, you end up, getting your trades taken out. In fact, if you also know that the market is in a ranging phase or is consolidating, you can decide to pick your trades from this leg here and then take your profit when it comes here, take another trade from here and take profit when it gets down here. So it's good you know the direction, it's good you know what phase the market is in, because that will tell you if you should place your trades at a particular point and take your profit at the next one. All right, now upon identifying this direction, you go ahead and then you look for key levels. Okay, so key levels are basically the levels where you are seeing the price take those sharp turns. All right, so you see that this is an uptrend. All right, now when the price moves from here to this level and then it pulls back like this, is leaving this V shape, a reverse V shape that you are seeing here. Okay, so this is a key level, so you can mark this key level. All right, now why this is important is because if you mark this key level and price pulls back at that key level and finally breaks it to the upside, what you can do is that you can wait for price to come back to that key level, and then you take another trade from that key level all the way to the upside. And that is a key strategy that a lot of people use to trade the market. I'm going to take my time to show you that on the chart as we proceed. But for now, what you need to pay attention to is that when the market breaks this particular key level and it goes all the way up, there is, a higher certainty that it's going to reverse back to that key level before it bounces off to the upside. This is mostly regarded as break and retest. So it breaks this key level, it retests it, and then it goes all the way to the upside. So all you have to do is to be patient enough for the price to break this key level, wait for the retest to happen, get your confirmation, and then take your trade to the upside. That is all you have to do when you are playing out this strategy. The third step we're going to look at is liquidity. If you look at this, over here we have all of these levels here reversing at the same level. So these levels are mostly regarded as equal lows. Okay, now the opposite side, which is the top side, is also regarded as equal highs. Mostly where price reverse from, like these bottoms and these highs, are regarded as liquidity zones, just because everybody who is trading this market will be eyeing these zones as places where they are possibly going to take their profit or they are going to place their trades from. And because of that, a lot of people target those zones, and that means if you are placing your trade, you may put your stop loss at the bottom here and then put your take profit at this high. All right, so you do something like this to take your trade. All right, so this bottom here becomes a liquidity zone. Now this top here is also a liquidity zone. If somebody asks where is your liquidity, well, how would you identify your liquidity zones? It's really simple. What you have to do is to look at the current leg of the price. If you look here, you see that when price did this retest and it went all the way up, we are seeing this pull back to the downside, right? But then we don't know where this is heading. All we can tell for sure is that price was once at this level and then it was also at this level. So if we are looking for liquidity zones, where would we mark as our liquidity zones? Well, we'll mark this extreme high, then we'll mark this extreme low, because what will happen is that one of two scenarios, the price here could come all the way down to this zone and then take it out, or it will reverse from here and go all the way up and take this zone out. So these two areas are your areas of liquidity. Liquidity means money, so you are basically looking for where the money lies. So it could be resting at the top here, or it could be at the bottom here. If somebody plays a trade from here, they are going to put their take profit probably here and put their stop loss here. Okay, and if somebody wants to place another trade, which is a short trade from the top, they are going to put their trade here, something like this, and then put their take profit possibly around here. So that tells you that this zone here is where stop losses lie, same as this zone here. So if you are targeting where the money lives, or if you are targeting liquidity zones, these are the two areas you possibly be looking at. So after you determine the direction of the market by looking at your market structure and analyzing it thoroughly, you now move ahead to look at key levels. Now, by analyzing the key levels, you'll be able to also determine the liquidity zones on the market. All right. Now, the next thing is to look for imbalances. With imbalances, we are looking for inefficiencies in the market. Well, I'm going to show you more of that when we get on the chart itself. But one key imbalance to always look out for is a fair value gap. It's really important you pay attention to fair value gaps when you see them on the chart. All right. I'm going to show you what fair value gap looks like when we get on the chart itself. However, from imbalances, we're also going to look for order blocks. Order blocks are mostly where we are going to trade from. So when we determine our direction, key levels, liquidity zones, and all of that, we are also going to mark order blocks. These are the zones where we are mostly going to take our trades from. The last step is to look at our entry and confirmation, and this is how we'll be able to trade the market. Now let's get on the chart and then put this in practice. So let's say you are here in the morning and you are wondering, what do I do? How do I place a trade? How do I determine the direction of this market? Well, that is what we're going to do. So the first step is to determine the direction of the market by looking at market structure. So clearly the market was at this particular zone. And then as you can see, it has been here in the past before. All right. So this shows that the market was in an uptrend. But then this reversal here is also telling us that the market is reversing and it is in a downtrend. Okay. Now, because we are looking for quick trades and we are day traders, we're not looking to hold for a very long time, we are mostly going to pay attention to the recent market structure. We're not going to pay so much attention to what has happened before, because most of those data is not going to help us in the next couple of hours as we are taking our trades. All right. So what we are going to do is that we are going to focus on this particular part of the market. We are going to focus on this part. Okay. This is the zone we are going to focus mainly on. All right. Now, focusing on this particular zone, you realize that the market was at this particular low and then it moved all the way up. So if I mark it up, you realize that it was here, then we saw this, then we saw a reversal here, did a pullback, came back down, did another pullback, down again, another pullback, and now we are at this particular level. Now this clearly tells you that the market is reversing, but it's reversing from where and heading to where. That is where we need to now focus on key levels. Okay, so the first one is to determine the direction, where we've clearly determined the direction here, which is a downtrend. All right, but then this downtrend, is it a quick one or is going to actually reverse for a long time? Well, we will only be able to identify that if we mark our key levels and determine some liquidity zones. All right, so what key levels can we look at? The first one is this level. All right, this level is a critical key level where we need to pay attention to. All right, now from this zone, which other key level do we need to pay attention to again? I think this one is also a critical one. All right, from there, let's mark this particular level as well. Another important key level I need to mark is this bottom. All right, this is because this is where the entire move happened from. If you pay attention to this, you realize that the market did a pullback here and then we had this big move to the upside. So this down here is our major low. All right, and it's important we mark that key level. Now this tells us that the major liquidity lies at this bottom here. So we have this zone as one of our key liquidity zones, and then this high is also our extreme liquidity zone. All right, so the price could be targeting this low because everything that you are seeing here started from this zone. So you've marked the low of it and then you've marked the high. However, the market is closer to this low than it is to the high. The next thing you're going to do is to look for some sort of inefficiencies or imbalances, which I said I was going to explain to you on the chart. One key inefficiency you will mostly spot on the market is a fair value gap. So if you look right here between this level and this particular level, what you will notice is that there was no other candle here. So market moved from this zone all the way here, reversed to this zone, and then it moved all the way down. But then it didn't come to cover this particular zone. So here we have an inefficiency which is located at this particular zone, which means in future the market is possibly going to come and clear this particular inefficiency. Okay, another inefficiency could also be spotted here if you look closely. this looks like another inefficiency. All right, so market could trade back into this zone to clear it. This is going to help us understand where market could possibly trade back to. Okay, so it's good we mark those inefficiencies or imbalances. The next thing we need to look out for is an order block. Now, an order block in this case is this particular one. All right, that is because an order block is mostly the last traded candle before the reversal. So this is a downtrend. All right, so we are seeing more sales here. The last candle here before the up candles form. So this downtrend, all these down candles that are coming down low, the last one before the up candles form, that is regarded as an order block. All right, now if you look over here, when the market got to the upside, we saw a big reversal. All right, now the last up candle before the reversal is also an order block. This particular one is regarded as an order block. Okay, this is an order block. It's quite big because we are on the 4-hour time frame. Okay, so you need to pay attention to that. But in this case, because we are looking to trade to the upside, because at this point the market has reversed almost at the zone where the market actually took off from. So the only thing we'll be looking out for right now is either a reversal or break and retest of this particular level. Okay, so what we are going to do is that we are going to wait for price to tap this zone, then we'll look for our entry and confirmation. Then from there we can take our trade. All right, so from here let's play this out to see what happens. All right. All right, so right now price has tapped our order block, which means we are looking for confirmation to take this trade. So we'll go to a lower time frame like 15 minutes to look out for some sort of confirmation. Okay, now 15 minutes, you realize that this particular candle, after it tapped the zone, it decided to go all the way back up. All right, if you pay attention to this, you realize that at this point it broke it. So we had this break here. All right, now after this break, price decided to come back into our order block. All right, now at that point we are having what we call a retest, so we can clearly take our trade now because we have seen the price tap into the order block and then broken the previous candle, and now we are getting this retest. Okay, so I'm just going to place my trade from this zone and target let's say this high. Okay, then I'll put my stop loss right here. Okay, so I'm going to play it out so we see how it goes. All right. Okay, so as you can see, this trade played out perfectly, but there's one thing I need you to pay attention to. This level that we marked on the chart, that is an inefficiency. You realize that the price actually moved all the way from our entry level here, and then it went clearly to tap in there, and that is where we saw the reversal. Okay, so it's important you mark these zones because that is what is going to guide you to take your trades. Because of course, I took my trade up to this point because mostly from here all the way to this level on Solana USDT, I would be in profit and I'll be good to leave. I'm not sure I'll hold all the way to this zone. I could, but I'm not sure I would. So at this level, I think this target is cool and fair for me. Okay, so it's important you go through these steps, and then clearly you'll be able to take some of the cleanest trades on the chart. Another thing you need to look out for is that as soon as the market moves from your entry, what you can do is that you can adjust your stop loss maybe to this level, so that you can reduce your exposure. All right, when it gets to a certain level, let's say this range, you can adjust all the way to your entry so that you can take off your exposure completely. Now let's say market got to this level and then you were quite sure that it was going to hit this particular fair value gap. What you could have done was that you could adjust your stop loss all the way to maybe this zone, something like this, and then you keep the trade running. What that means is that if this market reverse, it's going to close when it gets to this level, and then you're going to be in profit. Okay, so you can just leave the trade running here knowing that you don't have any exposure, and if this market reverse, you will still be in profit. So this is a cool strategy I personally use to trade the market almost every single day, and I think you can also do the same. If you're interested in trading Bitcoin, Solana, Ethereum, or any other cryptocurrency, but you're not sure how to begin, you can check out this video.